Don't we rumble? Float like a butterfly and sting like a bee. Ah, rumble, young man, rumble. Down goes Frazier! Down goes Frazier!
It's time to get in the ring with the Cornerman, preparing dentists for the next round. We give you business insights, trends, and timely information. And we'll interview experts to help you make smart financial decisions. Now, here are your Cornermen, Rob Joyce and Mike Bark.
We're back with the Bull Moose Cornerman podcast, and today we are joined by one of the original greats in dentistry, Dave Dorley from Third Coast Advisors. Dave specializes in disability and life insurance, is one of the go-to guys for the Wisconsin Dental Association and other places as an expert in this area. And let's just turn it over to Dave here. Hey, buddy, what's going on?
Hey, Mike, thanks for having me on. I appreciate it. I've been listening to some of these podcasts that you put on, and I'm flattered to be invited. So thanks for having me.
It's number one in niche dental finance podcast. It's right up there with Rogan. We're gonna get the spot.
Yeah, absolutely. Yeah, I don't know if you have those higher ratings, but we'll work you up there. Hopefully, I'm sure disability insurance will help you.
This, if we get a couple hashtags on it, should do well. So, with disability insurance, it's one of the surprising things for me when I started out as an accountant with dentistry is the rates with disability as it relates to dentists. So what does disability cover? I mean, just give us kind of the overview of why it's an important policy.
Yeah, I mean, for me, as I got into really specializing in disability 13, 14 years ago, I believe that one of the greatest financial threats is somebody's income being depressed or going to zero. And so I think I look at disability income protection as really a foundational piece that most dentists are fairly aware that their ability to practice and continue to do procedures are important. And so they're aware of it, but there's numerous differences as you get into evaluating it. So that's kind of where I come in, and I compare and contrast different options that the dentists have. But 90% of disability claims are due to illness versus injury. And so that sometimes is pretty surprising. Most of, currently I think I have 3 or 4 claims going right now. And so they're all illness. They're all either conditions that somebody is receiving treatment for, or progressive type diseases that cause their production to become depressed for a period of time.
So what the disability insurance comes in is it acts as kind of a stopgap to their income stream, correct?
Absolutely. Yeah. And we can't insure 100% of somebody's income. The insurance companies only will issue about 70% of somebody's income to replace. So they want to have some inherent incentive to return to work for people. But it is, yes, a stopgap for when income goes down.
Okay. When they're going through the process, is it better to get disability insurance when a dentist is toward the beginning of their career? Or, is it a matter of when they start making some real money within it? When's a good time to have that initial conversation and get a policy in place?
Well, of course, the insurance agent in me wants to say, hey, do it now and do it soon. But there are other reasons besides my own reason as running my business to do it early. And that is to, getting disability is not generally easy for everybody. So any kind of medical condition that could occur, and that could include mental nervous, it could include some sort of surgery or condition that could come on as their career is progressing. So getting it early is really important because it is medically underwritten, where you'd have to answer certain medical questions on how healthy you are. And so early is better. It's also really important to get it early to lock in pricing that's guaranteed to age 65, which usually will cover somebody for their entire career. So early to avoid any kind of limitations due to medical history, and early due to pricing lock-ins.
So when they go in and they go and get the medical underwriting and things like that, what do are they going through a full physical? How much of a pain is that to go through that process?
Well, in our current environment, things have changed, as you would imagine, maybe, Mike, but not everybody wants us, in most cases, we used to have a nurse that would be hired by the insurance company to go visit people at home. And now the underwriting has advanced to a level where the gathering of labs or blood and urine and things like that are not as required for most cases. So most of the time it's medical questions nowadays, especially during the COVID era, where the companies were mostly getting close to not having to collect fluids in most cases anyways, but the COVID pandemic accelerated that concession from an underwriting standpoint. So very few young or younger physicians or dentists are being required to have in-person visits with a nurse. Okay.
Sure.
But they definitely have to disclose medical history and answer medical questions, and there could be records ordered by the insurance companies to verify.
And when they're looking at setting up a premium or an amount of benefit, that's typically going to be based on the profitability of their particular practice, correct? Are there any high side limits on that? So, for example, if we have an established doctor making $300,000 a year, are they able to insure 70 to 80% of that income, or does it cap out at some point?
Yeah, usually, so there's going to be, like I said before, about 70% of income can be replaced. But for the doctor, and we have many of these that are earning $300,000, some less, some more, where that particular doctor, Mike, would be able to get about $13,000 per month of benefit, which would replace their income. And so that would be about the limit for that amount. So yeah, so for $200,000, it would be about $10,000 per month. And then for $300,000, they don't quite give an equal amount more, where you would think it would be $15,000 a month, but it'd be about $13,000 for that type of doctor.
Okay. So when it comes to pricing on these, you mentioned that it's better to get it when you're young because hopefully there's nothing wrong with you medically and all those things. As they lock in that particular pricing, it would, if they want more benefit at some point in the future, do they have to go through underwriting again? Obviously, their price would change as they're maybe requesting more of a benefit, but do you have to go back through underwriting every time you request an increase?
That depends. So it depends on if the policy they purchased had what's called future purchase options built into it. We always try to build in future purchase options. So for example, a dentist that's starting out of dental school may be earning $150,000 per year, but very quickly progresses towards like the number you mentioned before, maybe a 250 or 280. We want to allow them to increase those benefits without going through the entire underwriting again. Now, if they had a health change in between, then and they had to go through underwriting, they may not be able to increase if they didn't have the future purchase option built into their policy. So we always try to get a future purchase option built into their disability policy to avoid underwriting issues or re-underwriting in future when their income goes up.
Okay. So when they're purchasing this disability insurance, what are some important aspects that should be included in the policy? I would imagine that not every disability policy is created the same. Right.
So as I look at a situation, if we take, for example, a young doctor that's 30 or 32, I look at that as being pretty early in their career where they potentially could have 30 years of work ahead of them if they chose to. And I think it's important to have a couple of I kind of divide them as essential and optional riders, where I would consider the prior discussion we had on future purchase options as, I would say, an essential rider. the option to increase your coverage without medical underwriting. That would be one. The other would be benefits for partial disabilities, because about 70% of claims are due to partial claims. So it's not a full disability claim, but there's something that took place that caused their income to go down, but not entirely go away. So partial disability benefits in a policy are really important.
And I know you had mentioned things in the past about having an insurance that replaces or something with regards to your disability that's specific to your job. So for example, we're CPAs, we're salesmen, you could cut off our arm and we can still do our job and do that. But a dentist obviously has a specific skill set that they're bringing to the table. And if you have a neurological issue or something where your hands aren't working, are they able to collect their benefit, or does the insurance company go, well, okay, Mr. Dentist, you could go work as a supply rep, or you could go work somewhere else?
Yeah, that's a good question. And I think what you're referring to is what's called true own occupation. So the policies that we write, and we generally we recommend a dentist especially goes with what's called a true own occupation policy. And that means if you can't perform the duties of a dentist, even if working as something else, your benefits would not be offset, okay? And so not all companies offer that type of language in their contracts. And so, yeah, you could be a very successful dentist, run into like you said, a neurological issue that's progressive, that prevents you from practicing effectively. And perhaps you use your skill. Most of the dentists or physicians we work with, they don't want to be disabled. They want to work and be productive, citizens and raise their families. And they're not looking to sit on a lawn chair. So there's the job of dentistry or medicine in general requires very specific skills, and especially a job of a dentist. They do a lot of procedures each day. It's harder than our jobs, Mike. Where they're working and they're in static positions for long periods of time. And we want to make sure if they get sick or hurt as a dentist, and if they could be successful working for another, like a supply company or a consultant, or maybe they come work for you or myself and be successful in what we do, that their benefits as a dentist wouldn't be offset.
In terms of the different types of disability insurance out there, I think everybody probably has some understanding of what personal insurance is for disability. It covers your income stream, but are they able to buy things for their office that if they have a temporary disability or things like that, that the overhead of the office can be covered?
Yeah, good question. That's the second most priority. Number one is to protect their personal income. That's kind of the order of operation that I work at. I always make sure they're protecting their paycheck first, because that's the most valuable thing. The second thing is many of your clients and mine, Mike, they're business owners. So they have people that rely upon them for paychecks, they have landlords that require monthly rent. They have overhead expenses. So there is a form of disability insurance called overhead expense disability, where if the practicing dentist is sick or hurt and can't continue to practice, then the overhead expenses would be reimbursed on a monthly basis to allow. And the way I try to think of it is I look at overhead expense, Mike, as practice value preservation insurance. So if somebody in Europe, you do a lot of valuations where if somebody's out and sick or hurt and going through treatment, at least they can pay their bills. Perhaps most policies that are overhead policies have a professional replacement provision where it allows them to pay maybe a friend of theirs that's a dentist to come in 1 or 2 days a week to see their patients. And so it's a really important, I think, form of insurance for a dentist that's a business owner to consider. Okay.
As we know too, is there an advantage to offering disability insurance as a group plan within a dental practice? Does that help spread maybe some of the underwriting risk that there might be, or
Well, group disability, I do group disability for dental practices sometimes. Generally, that's when we have a owner or a dentist that's making the decisions on. So if we have an uninsurable owner that just can't get underwritten and approved for individual disability, we may look at a group plan that covers, that they offer to everybody. The reason they may be doing that is so that they can get it because they're so reliant upon their income. Mm-hmm. But yeah, we can design a group plan if somebody is uninsurable on an individually underwritten basis. That does make sense. But the default is always trying to get them an individual policy just for them. Where we can get some real, what's really important is just as an aside, female dentists are generally priced about 40% higher than their male counterparts because illnesses tend to present themselves earlier during their careers as females versus the men. And so when we have three people, if we have a female that's the owner of a dental practice, we may want to, if they're open to it, have them consider offering a couple additional policies or small policies to additional employees. And that can bring their costs down by getting them what's called unisex or gender neutral rates. Okay. So that's something that as we talk to business owners that are women that own the practice, that's something strongly to consider.
When you're designing that type of a plan, is that something where you could segregate and take 2 or 3 employees and have different levels of benefits?
Yep.
Is it more along the lines of health insurance where the policy happens to be the policy for everybody?
No, it's customized. It's not covered by ERISA. So it can be specifically offered as a employee, a specific benefit as for a class, like if they want to offer it to their number one, their office manager and maybe an associate dentist that's working there, they can get that discount. So they get 25% discount plus gender neutral rates, which usually more than pays for itself in the savings of the doctor's policy, even if they're offering 2 or 3 additional policies.
Well, and as you just said, I mean, if the rates are about 40% higher for a female than it is a male,
yep.
And then start talking about discounts on other things, it probably does make sense.
Preference. Some owners just don't want to get into that, or they don't want some employees perhaps feeling like slighted by not being offered it. They just don't want to get into it. But others, the dollars are too big. I mean, I've seen savings of $3,000-$4,000 per year by just doing this.
Okay. That's something, to keep in mind for everybody. And I think the other aspect too is disability insurance is not, well, it can be tax deductible, but we generally advise our clients not to deduct it because if they ever do collect it in the future, it's not taxable income to them. So save $3,000-$4,000 on the premium, especially with tax deductibility, becomes a really big deal.
Absolutely. Yeah. I would definitely encourage them to try to, we always defer to you, Mike, or their CPAs to either add it back to their W-2 or make sure that they're paying taxes on that premium that's being paid so their benefits are non-taxable.
Are there any other special considerations they have to concern themselves with when they're thinking about getting a disability policy or putting one in place for their practice?
Yeah, I mean, there's certain, the nuance gets a little narrower so there's about 7 or 8 companies that do individual disability that's individually underwritten and what's called non-cancelable. And what non-cancelable means is that just the insurance company can never change it once they've given it to you for until age 65. So where it gets a little nuanced and important for dentists is in the partial disability benefit rider that I mentioned, Mike, it's extremely important for a dentist to have what's called an enhanced partial rider, which there are many cases where somebody may become totally disabled for a period of time and get treatment. They don't die, they return to work, but they're slower. Okay, so they're just not as productive for whatever reason. And about 80%, 85% of the policies out there, at that point, if they're doing everything they did before and they're working as long as they did before, but they're just slower, most policies are going to stop paying benefits. Okay, in that situation. So the doctor earning $300,000 that's now earning $200,000. They in most cases, with most policies on the market, those benefits are going to cease at that point. Okay, so we have to be really knowledgeable on how these riders in the partial disability benefit area work, and there's only a few companies that offer those types of riders.
Is there a big difference between the companies that offer disability insurance? I mean, we see a lot of people with a Guardian or an NML, but you also see people who are doing kind of stock plans, either out of the American Dental Association or their various state and local. Do you see big differences between those plans or the benefits that get paid out?
Yeah, they are. There's a wide difference in them, and that's where, as you run across them, I'm very familiar and kind of a student of learning the differences between them. But yeah, the ADA, the American Dental Association plan, is fairly common. They've done a great job with offering dentists disability insurance, but there are some limitations. So the pricing is banded, so it will go up over time. As the dentist goes through their career, and the pricing is not guaranteed. So it's a group oriented plan through the ADA where it can be repriced, it can be changed from time to time. And so it's not a contract. You're a certificate holder, but it's not a contract like it would be with a Guardian or a Northwestern Mutual company like that.
Okay. If somebody's in a multi-doctor practice, anything special they need to consider there, maybe having a disability policy on each other or something like that, should things go on, or something that might pay out to the practice if a key man can no longer produce?
Yeah, that's a good question. We run into a lot of that. It's usually the last thing that the doctors fund for, like a shareholder agreement that they have. So there's usually provisions in a shareholder agreement that address premature death, disability, divorce, loss of a professional license, all these different things that lawyers will write in the shareholder agreement. Well, if it's really prevalent in the 2-doctor practice or multiple doctor practice, where if one of the doctors is unable to produce within the practice and can't practice as a dentist, they have to think about what are they going to do and where are the funds going to come from to pay that doctor what their shares are worth. And so most shareholder agreements will require the disabled doctor to release their shares to the company or to their partner for a sum of money, certainly. And so that money's got to come from somewhere. We tend to try to place and enforce disability buyout insurance. So they could do that. They could go to a bank. They could do an installment arrangement. But we try to do insurance where we can just offload that risk if it does happen. So it's fairly clean. So not a lot of lenders are looking to loan money to a practice with a disabled doctor. Correct. Where, it's kind of a risk for them. So that's consideration. We also get into, Mike, where we have a younger dentist buying out an older dentist perhaps over time. And there's a variety of insurance considerations and risks as it relates to that. So the older physician or doctor that is leaving, they want to make sure they're going to get their full payout. And there's definitely a risk that younger buying doctor could become sick or hurt and couldn't fulfill their agreement with that doctor. So there's forms of insurance that are disability and life insurance that we can place to address or mitigate that risk too.
With disability being a hedge essentially against income preservation, do you have clients get to a point within their practice where they're getting toward the end of their line where maybe they back off the premium or just get out of it entirely at a certain point when they're sort of independently wealthy?
Yeah, absolutely. We get a few of those a year where somebody's fortunately got through their career without having to, they've paid premiums through the years and they haven't used it, which is a good thing. So that I would call that kind of a small mistake. where they paid the premium. It was a cost of doing business, and now they've accumulated wealth, and they've accumulated wealth to a level that their income can continue forever. And so if your income can continue forever, then you don't need disability insurance, certainly. So everything I do just revolves around income continuing. And so if they have enough assets to either annuitize or draw interest off of, then they probably don't have a need for disability.
Excellent. But I mean, definitely at the younger part of the career where we are in our lives, where we have dependent children and all those things, how often should they be checking in with you to look at how much disability they have, whether they should be increasing it, not increasing it? Is that an every year, every couple of years?
Yeah, I mean, it's usually every year, every couple of years. With the policy owners that I have, either myself or my assistant will proactively reach out to them just to check in, see where their income's trending at. Well, see if they want to pursue one of those purchase options to insure more of their income. But yeah, I think every couple of years, I mean, again, income, going down or going to zero being the biggest financial threat, we need to be proactive about it. So.
And with, obviously they're entering into a contract with this. If their situation changes and the income goes the other way for an extended period of time, either perhaps somebody decides to start ramping down for a variety of reasons or whatever, can they back off the policy?
Absolutely. Yeah, we do that quite a bit. So as younger dentists, maybe, the 30-year-old dentist that's got all the riders, they got cost of living adjustments, they get to 45 or 50, we may remove the cost of living rider at that point. We may change the policy to only a 5-year benefit just to save premiums, but to still have some level of coverage. It's very easy to reduce insurance coverage with an insurance carrier without any kind of, resistance. Mm-hmm. It's more difficult to add anything to a policy or add more benefits or longer benefits or riders.
Just because you've used the term a lot, it's when I think of riders, I think of concert riders and a band like Van Halen saying you have to take the brown M&Ms out of the M&M bowl. But are riders essentially a thing that allow you to customize a policy for somebody's specific needs?
They do, yeah. I shouldn't even use that. I've been trying to get better at using insurance lingo, but thanks for catching me on that. Yeah, riders allow me to the flexibility to customize a disability contract for the person. So, I have my essential riders that I think people should have. They don't have to agree with me, and we certainly don't push that, but we explain the pros and cons of each, and we can customize with those riders to make the policy what they want.
And you think the essential riders are things like having those future purchase options in there?
True on occupation, purchase options. If you're under age 35, the cost of living adjustment rider, and then the enhanced partial disability rider. And those are what I would consider essential. On the optional, I would consider student loan protection rider. So if they have student loans, we have disability riders that can ensure the payment of those loans that they're obligated to pay. We can also put a catastrophic rider on the policy where it would pay an additional disability benefit should they become have a loss of 2 activities of daily living or a cognitive impairment. It would pay more money. So there's different riders. We also have lifetime benefits. So there are disability policies you can buy that pay benefits for life should you become disabled. They're fairly pricey.
Sure. And is it one of those things where you can essentially insure as much to some extent as you want, as long as you're willing to pay the premium on the one hand, and you have the income to justify it?
I always say, Mike, I'm not here to tell you what you have to buy. I think you should buy something greater than zero to insure your income. It doesn't have to be everything. And insurance it's not an all or nothing. It's like if you make $300,000 and you qualify for $13,000 a month of benefit, maybe 10's good, maybe 5's good, and whatever is appropriate for you.
And obviously Third Coast Advisors does a lot more than just disability insurance. one of your guys' big thrusts as well is probably life insurance.
Yeah.
If that doctor's meeting with you to talk about disability, again, some of the same kind of precepts apply where you sort of want to do it younger. Perhaps you may want to buy an insurance policy that might be more in terms of a death benefit than you ever think you're going to need because you're going to get to that level pretty quick. What are you walking them through on a life insurance policy?
Yeah, I do kind of a life insurance 101 with newer people to life insurance. It's generally, there's certainly the longer a lot of people undershoot life insurance. So when we look at life insurance, we look at, okay, how much, a lot of people don't know how much they're eligible for. If you're 30 and you earn $100,000 per year, you're eligible for 30 times income. And so the reason that's what an underwriter is going to allow you to get. So that person could get $3 million. And so a young dentist, I don't think you're over-insuring with term insurance by doing that for a period of time. And so we can ladder different terms. We could do $1 million with 10-year and then expires after 10 year. We could do $1 million of 20 year and then expires after 20 years and then 30 years. So we can do that to customize and drive down the cost. So the longer the guaranteed term, the higher the premium for an insurance company.
Mm-hmm. But you're also locking in at a lower rate if you're doing it at a younger age.
Absolutely. Absolutely. And the other thing too, Mike, I would say is I encourage even those dentists or people that are aspiring to be business owners eventually, even if they don't have a family or children, I think there is the legitimate reason for them to get just $1 million of term insurance when they buy disability, because as you know, most banks want some sort of collateral assignment of life insurance should they die during their note being paid.
Sure. Absolutely.
Okay. So,
and with life insurance, I think that point is really valid and something we would advise a client to do to some extent is get as much as he possibly can early on, because you will ultimately grow into that policy. So you may as well lock into that rate when you're 28 versus 48.
Absolutely.
Because as we can well attest, it doesn't get any easier, right, Dave?
No, it doesn't get any easier.
It starts breaking down.
Yeah, no, I know. They actually gave me life insurance, Mike. So, no, that's great. But good point. And again, it comes back to the reason we buy life insurance is to replace our income or to fulfill our obligations that we took out.
And what else do you guys do over at Third Coast Advisors? You have the life and disability insurance. Any other areas that you guys work on?
Yeah, we do have a financial planning practice as well. So that's not my area of specialty, but we manage about $1 billion of assets at Third Coast between our advisors. And so we do certainly have the ability to do fee-for-service planning, fee-only planning even. And so there's a variety of things that we can do in that area. So we have our full-service planning firm. I just happen to be the insurance geek there. So.
Sure. And I think like we always tell clients, when it comes to life and disability insurance, it's one of those things. It's like putting a roof on your house. You're not going to derive a whole lot of enjoyment out of doing it, but it's something that's completely necessary for the protection of both your income, but your business as you're going through it. Absolutely. And you have to have the right policies in place if something does go wrong, and we hope nothing ever goes wrong. It'd be perfect world. You pay a bunch of disability premiums and you never have to use it.
Yeah, and that's what I call the small mistake. The big mistakes is you don't do it or you do it to a level that's not appropriate for you and you do need it and you don't have enough. So small mistake is not, it's paying the premium, never needing it. Big mistake is not doing it or not doing enough and needing it and you don't have it.
Well, we'd like to thank you for joining us on the pod. Dave can be reached over at Third Coast Advisors. They're based out of Milwaukee. They're a firm that a lot of our clients, especially in the Wisconsin area, use quite a bit. Are you guys able to cross over to different state lines? Perfect.
Yeah, I'm licensed in Illinois, along with, I don't know the specific states, so I won't name them, but about 15 other states as well. Especially, as people go through practice, residency or training, and then they move away. So we're licensed in a variety of states.
Excellent. Well, thanks for joining us, and we'll see you next time on the next Cornerman podcast.
Thank you for listening to The Cornerman. Be sure to leave us a review and subscribe to us wherever podcasts are found. For more insights and information, visit us at bullmoosefinancial.com.